Welcome to BlueChipTrader's weekly review of my trades. I'm your host, Scott Smith, and I host my trades under the BlueChipTrader ticker for our briefing trader service. And in this quick webinar, I'm going to go over last week's trades. To start the week, we had actually come in swing long with a long in Netflix. Right here, we bought it the prior Friday to Labor Day weekend, right around the $98, $99, $98 area. You can see the stock was heavily oversold going into Friday, and it seemed like a good area just to kind of pick up potentially for a bounce after Labor Day weekend. And fortunately, we were correct. The stock opened up high around 102, trade up to 102.50. So we took a nice little partial profit of about plus 3 points. And then we raised our balance stops up to break even around the 99 area. And the stock, you could see, came in pretty hard after that. And we did get stopped out once it came through that break even area around $99. The next day, on Wednesday, September 9th, I was looking at the stock again, just because it seemed like it was oversold on this short-term basis, and you had this outside reversal bar, and it just kind of felt like the negativity surrounding this stock with the Citron note saying that they were getting short and predicting lower prices, and it just seemed like we were just kind of due for this short squeeze to occur in the name, especially after that outside bar. So I had it on my radar, and you can see here on November 9th, on Wednesday, the stock did open a little higher and quickly sold off once around this 97, 96 resistance area. But that's the kind of signal that I like to see, because that kind of could set up a trap for short covering, and that's exactly what occurred. So we, after this gapped up and sold off for the first 5 minutes, I suggested that we go long around 97.50, and you can see we were triggered into the trade. And over the next 45 minutes to an hour, we did catch this nice solid $4.5, $5 gain back to the prior day's high, where we again took a nice little partial profit, raised our balance stops all around the break-even area. Throughout the day, the stock kind of just consolidated sideways. It looked pretty constructive. I thought it was going to make a move higher over 103 come late afternoon for another squeeze. But the sellers eventually started taking control on Wednesday afternoon. And then, given this current market conditions that we've seen where the market's been gapping up easily 100 points or up or down with the Dow. You just don't know which way the market's going to gap against you, given the high volatility that's been in effect in this market here the last 2 or 3 weeks. So unless I have a huge cushion that's going to protect my profits or my remaining balance overnight, I'm probably going to look to just get flat into the close. And that's pretty much the case that happened here in Netflix. You can see it didn't go above 102, 103 in the afternoon and actually started pulling back towards the opening range. And I was just by this time I was like, there's not enough cushion here. So I'm just going to sell out the remaining balance for the small game that I have and worry about it later on. Come fast forward to Thursday, I didn't touch the stock. Just wasn't any sort of setup that I particularly liked here. I think it was on my radar at Thursday morning in this little consolidation pattern. And I was looking for some sort of upside break in the name again. And that just didn't develop. So kind of just slipped off my radar. And if we go to Friday, which was September 11th, I was looking at the name again. And this time I did like it. It opened down a little lower. So I figured there was a potential, given the consolidation that we've seen in effect on Thursday, it seemed like there could be another squeeze in the name and back over $100 level. So if we were going to get some sort of opening reversal back into positive territory, you could see it opened down and it went back up through 99.50. It seemed like a good spot to jump on board with alongside to get maybe another squeeze. And you can see there it was. We got this nice little 50 cent, 75 cent gain, but I was looking much more back at these 102 highs, 103 highs. I was kind of hoping for to get it back up to there. And I could see it just kind of failed right after the close, right after the open, excuse me. Just kind of just nothing. Sellers just kind of attacked the name, didn't really do much. And by that time, the whole setup, that I was looking for, that immediate squeeze right back up to 102, 103 area, just wasn't developing. So we wound up taking a loss here for about $1 as it pulled back below the initial opening range. And that was Netflix. Netflix is a name that I'm definitely going to keep on my radar. It's just in play. Seems like this here in September. Lots of good movement. It's got a nice $4 or $5 range going on intraday. I didn't take a trade into today. Today's Monday, September 14th, and I'm just kind of watching it real closely because I think there's just lots of good activity in this name. Got to keep on the radar. Go back to coming off Labor Day weekend, and I actually had carried a little bit of actually, I take that back. I was not long Apple, but on that Tuesday after Labor Day weekend, there was all that news and hype surrounding the new iPhone 6s Pluses that were coming out, and I figured maybe this stock, being Apple and a favorite among institutions, could actually get bid up ahead of that news. So the stock did open higher on Tuesday, made a push forward, and then after about an hour or so, it started to consolidate around its opening price here, around 111s, and looked like a good spot to just take a long, see if it can get a push back above the 112.50 morning highs sometime midday or during the afternoon. Just took a shot at it, and just kind of flattened out. You can see right here, not much was going on thereafter. And then once this drop came here, I just started getting bored with the name. It was just seemed like everybody started talking up about how Apple was coming out with this the new version of an iPhone, and it just seemed like it was almost too obvious of a trade, I should say. So I just eventually just scratched the trade out for I think it was about a 75-cent loss or something like that. Nothing big. It was a small position to begin with, and you could see that eventually price did start collapsing out of there. BIS is a Contra Biotech ETF, and I was initially swing long this one based upon this pullback here in late August. It came back to the 20-day moving average, and it started to show signs of holding in here around 29.30, and we got long and started working out pretty well in our favor. And I think we locked in about a 2-point gain, $1.50 gain here initially on that pop, right into September, which held in there. And then we kind of just tightened up our stops around the $29-30 area, and it held in there for a little while. But fast forward to September 8th, Tuesday, and you can see the sellers just came back in as the biotech started to rally, and we just kind of scratched out the balance there. Overall, we netted about $1.50, 2-point gain on that. Valero was a stock that I was also on my radar. Just a nice consolidation here. It was one of the few stocks that was actually coming back to the prior week's sell-off highs and stuff. So along with Valero, it was also other refiners. TSO was acting pretty strong as well, with HFC, MPC, PSX. They all have this nice, strong kind of type of move. We're ready to challenge the prior week's resistance areas. Valero looked the most cleanest to me, so I wanted taking a long when it broke out above $62 area. The following day, when it opened lower, we added to the 62, and we managed to get about a $1.50 gain on it. Partial profit. We're still long a little bit. Ideally, we like to see refiners, or Valero in that case, just come back up here to this gap, which is around $65. That'd be ideal for a swing trade. We've already taken a partial profit, so it just gives us a little bit of cushion just to hang on a little bit longer here. Worst case scenario, hopefully we just kind of get a scratch out of it if it drops below 60. But otherwise, maybe we look to capture another $2 or $3 to the upside here during expiration week. Wynn Resorts. So this is a China play, apparently, with Macau numbers being really low for this casino name. The stock has just been absolutely hammered over the last year or two, just really under a lot of pressure here. It's trading as high as $250, $200 area, and just been sold off really, really hard. And it's starting to look deeply oversold according to my analysis. So I started getting interested in the stock here around the $70, $80 area. And we've caught a few trades in it over the last few weeks to the upside. I believe on Wednesday when it dropped below 70, I'm sorry, I take that back. On Tuesday, when I took out the prior Friday's low, we were stopped out of our long position for about $2 or $3 gain that we had picked up going into early September. I was thinking maybe it got blown out of a bunch of accounts here on this big sell-off here in August. So I wanted to get long early September, thinking money was going to come back into the name for a rally, potentially back up to 80 or the 20-day moving averages. We did catch a nice little 2 or 3 point gain. We took some partial profits in, but then once it started to reverse, we got out of it. Fast forward to the next day on Wednesday, September 10th, it broke the $70 level for the first time in years. I suggested that we start scaling into it around 69, 68 to play a little bounce. The next day, we got a little push back above 70, 72 was the high, scale out $1, and then it came back in and just stopped us out for, an overall scratch in the trade. I still kind of like it down here. I have no position in it yet, but I do definitely think that it's a deeply oversold name that just looks like it's going to, one of these days, just rip the heads off shorts here for about a solid, strong 1 or 2 day move, potentially back up to starting at the $80 level. So definitely keep it on the radar. LULU had earnings last week on September 10th, which was Thursday, and it had a real aggressive sell-off here. Once it started to take out this August low of 55, I believe, 55, I started getting interested in the name. I just started to track the times and sales. I was watching all the prints, and you could see that buyers actually started stabilizing the stock on a 5-minute chart right around the $53 area. So you have this downtrend going on in the name all Thursday morning. Buyers finally started to gain control with the break of a downtrend, tried to push it back above this 20-period moving average on a 5-minute, came back, retested the lows. We took a quick trade in here. We did capture just over a $1 move for a scalp, and I just didn't trust it. Again, this market's extremely volatile lately, so if I don't have a big enough cushion of, say, percentage-wise, maybe 5-10%, I'm probably not going to hold on to anything for a swing. So I did sell it out into before the close, the balance. The next day, it opened kind of flat, came back, retested the prior day's lows, and it seemed like a good spot to maybe this is going to stabilize. So we wound up jumping back into the name around the 53 area. And it's just kind of hanging here. It's a small position. It's a swing. Thinking maybe if it clears 55 resistance, it might get some sort of upside to hopefully, back over 55. It can probably go to maybe $57, $58, and we could sell another partial into the strength. If you fast forward to today on Monday, September 14th, still sitting in the names, just stabilizing, consolidating. The confidence level, the longer it takes for this thing to get back above resistance and starts getting some buyers interested, the confidence level as holding this a swing kind of drops a little bit. I'm watching it. It's a small position, like I said, nothing too crazy. It's definitely looks like it's overdue for some sort of upside here, but we'll just take it day by day for now. Amazon on September 11th. Here was a name that when the market was selling off or showing some signs of weakness last Friday, this Amazon was just kind of consolidating, holding a bid here around 524. I suggested a long if it got back through 525, which started to happen after the first hour, and it just kind of stabilized. And then going into midday, got a nice little lift, popped over the morning highs for a nice $2 partial profit, hit 528. Again, it was a $2.5, $3 partial profit going on there. Just kind of held there, retested our break-even point. We had tightened our stops up to the morning low. If it started breaking below 524, I probably would have scratched out the balance. Did manage to hold our break-even area. And if you had missed not taking a partial profit, you had a second chance later on in the afternoon to do it. And then right into the close, it seemed like there was a lot of bids coming into a few stocks, and it did pop up at 529. So you did have an opportunity to sell right into the close for another profit if you weren't comfortable holding it over the weekend. If we fast forward to Monday, September 14th, you can see sellers just kind of immediately attack the higher open. There's an opportunity to take another partial profit for about 4 or 5 points, but you had to be really quick on the trigger to do that. And, kind of pulled back in, threw a break-even point down to 524, held that support level, I was giving it the benefit of the doubt here, but once it started to crack below 524 here, it just scratched out the remaining balance. Another stock on Friday was this AMBA. If we take a look at the daily chart here, it was a former growth name and liquid momentum name, which is our focus lists that really kind of highlight the strongest stocks in the market based upon relative strength and momentum. And it obviously slipped off our focus list here throughout August, and it had a negative response to earnings, and sellers have been kind of leaning into the stock pretty hard. And but there have been opportunities because it is a pretty volatile name, despite trading about 3-4 million shares a day. It's liquid, but it definitely can move intraday a solid 4 or 5 points. And on Friday, you could see sellers really start attacking the stock. The volume was getting super heavy here, throughout the first hour. And once it started to stabilize here and turn around, it started picking up on my radar again. I didn't take a position in it, but I was definitely starting to eyeball it to see how it was going to play out. And come the afternoon, we had this pop right around here. It looked like a good position to say, hey, you know what? The stock is trying to find a bottom here. The sellers that were really aggressive are moving out of the stock, and it's probably a good chance that it's going to stabilize in the 65 vicinity. So we took a small position, decided to carry for a swing bounce over the weekend. And longer term too, I also like this level here. If you go back to some gaps, I believe this was a breakout point, which lines up right around this 63, 64 area. So it seems like a longer term support level is in play. And like I said, the selling, you can see the real aggressive seller kind of disappeared for a while. So it seemed like a decent area just to maybe take a chance for a swing bounce coming into this expiration week. And fortunately, it did play out correctly. Stock had traded up as high as 69 so far in the first hour or two of the day, which we did sell a partial profit into. And we're just kind of sitting tight with this right now. And as long as it doesn't come back below our break even 65, 64 area, this zone right here, looks like it does have potential to get back up to 70 or so. So just keeping it, holding on to that position for now. Lastly, on Friday, I did take a scalp trade in this low price stock. This isn't really my forte, but when the market, when I get these single digit stocks and I see a lot of heavy volume in it and a lot of activity, for example, this VVUS was trading 12 million shares on Thursday, 8 million shares 12 million shares on Tuesday, 8 million shares on Thursday, and then, come Friday, it was trading 34 million shares. So something like that is definitely going to be, trade worthy in my eyes. Otherwise, I usually try to avoid most of these low price names, but the volume was just too heavy. So I just started looking at it for some sort of potential setup that I can potentially jump in for a quick scalp on. And after the first hour, this would have been ideal right here. This was an opening pullback play. You can see the price opened up higher, pulled back, and then rallied for about a 30 cents gain for scalpers to take advantage of. I missed that trade there, but I started watching it after the last hour. And when it pulled back to this 20 period moving average, you have a higher low in effect, and you have potential support there around 190. I did recommend going long. And our risk would have been this prior low right here, which was about 10 cents, which should have held support as well. And the profit potential would have been breaking back up to these highs of 210. So it seemed like it was a decent risk reward of 2 to 1, 1 to 2, I'm sorry. And, you can see bids started coming in here during midday, and it started probing the $2 level. So we wound up scaling out 10-cent profit, which was decent. And then sellers, it couldn't really get back up to the highs here. Some seller came in here and knocked it back down to our break even. And by that time on a Friday, what was done was done. And I was just ready to start the weekend. So I just kind of scratched out the remaining balance there. That is it. So for those of you that haven't picked up what my style is, I am somewhat of a swing trader. I definitely like to hold positions for multiple days as long as they continue to move in my favor. However, I do try to focus in on key support and resistance zones. And I'm going to try starting a position at these key support and resistance zones when I see them being overcome or holding. And if stocks start to move a point or two in my favor, I'm always going to trim something off. I just want to take a little bit of that position off, reduce my exposure, lock in some profits, and start tightening up on my stop losses. And I'm really going to try to let that rest of that position ride. If I'm correct, it's usually going to take off for a solid 4 or 5 points, or even longer. And I'm going to capture that nice turn, that nice momentum for a nice swing trade. If I'm incorrect, well, at least I took a little partial profit off. So when the stock comes back in and it stops us out, kind of offsets, it becomes a scratch for the trade or a really small loss. And that's really what this trading comes down to, is managing your losses, keeping them really small when you have to take them, and letting your winners run, which is, I'm going to sell a little bit initially to offset that potential loss that I could take. However, if it really does take off, well, then that's where all the real gains is going to be accumulated. And that pretty much wraps up my style of trading and how I've been trading this market the last week. It is extremely volatile still, this market. If we look at the VIX, it's trading at 24 as of today. Anytime the VIX is above 20, you just can't really trust anything. So it's not a market that you want to be trading full sizing, half size at most. And you really kind of have to respect if you don't have a big enough cushion overnight to hold a position, you really should probably get out of it before the close, unless you have deep pockets, or to add to it later on, or to just cut your losses and clear the next day if you're wrong. Hopefully you learned something from this video, and I will be back next week. Thank you.